Good morning. Welcome to Trade Setup right here on BQ Live, BQ Prime. I'm needed trying. Excuse me for that. Let's take stock of the trading situation. Remember, we don't have too many cues from the US markets because they were shut yesterday. But the global news flow first and then the Indian updates. So the global news flow, US President Biden is close to rollback of Chinese tariffs to fight inflation. Oil has held above the $110 per barrel mark as tight supplies balanced by the recession risk, and the US stock futures have inched higher after being closed yesterday. In terms of India updates, some good news from the state of Maharashtra and maybe some others as well. There is a 50% drop in Maharashtra, at least in the COVID-19 cases at 1515. This is as per PTI as of yesterday. S&P Global will report India Services PMI and Composite PMI for the month of June today. NCLAT is going to hear Jet Airways insolvency case today, and Jet Airways remains important. Remember, because aside of other things, there is an advent of competition in the Indian air skies, with Air India being active, Akasa Air being launched this week or the next, and Jet Airways placing some orders with Boeing as well. So lots happening in the Indian aviation space. Great for consumers, by the way. And FADA will release the retail vehicle registrations for the month of June today. So while the wholesales were out and the markets have reacted duly, but the retail ones also at times give a good indication and therefore are important. The SGX Nifty today indicates a start. Remember, as I said, the US markets are shut, so no cues from there. The SGX Nifty indicates a start, which is positive, which is good news. And it builds on from where we left off in trade yesterday, because it was a day of recovery. If you just look at the gainers to losers ratio, nearly 3:2 or slightly better than 3:2, with a bunch of stocks doing really well and the gainers doing far better than what the losers lost out. So nothing conclusive, but it was a good day of trade yesterday, which is actually a great sign. So actually, frankly, that's my trade setup for the day today as well. That if you look at it, 15,000, 1,700 is holding up, and banks are giving support as per expectations. Remember, we were talking about this yesterday, that with the releases that have come in over the weekend from the Q1 updates, it was expected that the banks will do well. The numbers have looked solid. HDFC Bank looked okay too yesterday. And as a result of which, banks are holding out, FMCG is holding out, and that's absorbing the selling pressure that we're seeing in global sensitives like IT and metals. Now, global markets may trade higher per se today, but keep in mind that activity levels are much lower, and therefore I still stick by what people have been saying, that this remains a sell on rally market. From a technical perspective, though, the Nifty closed above the 220-day SMA, which is apparently a key indicator, and other indicators like RSI and MACD are also showing some strength as per technical experts that I read. FMCG is starting to hold out and can gain with lower input costs. Remember, we're seeing food prices coming off, wheat, sugar, all of these prices globally are coming off. In India are coming off too marginally, and that should aid the FMCG company margins. As a result of which, viewers, you saw what Britannia went through in trade yesterday. There was some bit of a flavor there. ITC has been doing well. So here's a bucket that is holding out, even if the Nifty may not be going anywhere. That's the key point that I want to make. Now, in light of such a scenario, what is it that stocks what are the stocks that should be watch out for? Are there too many newsmakers today? No. But there are a few stocks that we should keep in mind still. One, Tata Consultancy Services. There is an ongoing issue with Tata TCS and in the US markets, and a US court has reduced the punitive damages in a trade secret case with an American software firm, Epic Systems, to 140 million. So there is a reduction there, and they've said that this can be appealed in a higher court, which TCS has said that they are going to appeal. So one, lower damages, and two, it can be appealed. It's not a very material stock moving development, but important one, may make TCS react a bit. You should know why. Then yesterday I missed out on this because the update came in from HDFC side. Then HDFC Bank has put out an update, and therefore I'm bringing this, that HDFC Bank is saying that it has received the no objection for the merger with HDFC. Keep in mind, viewers, for this to go through, a bunch of other things have to happen. The deal is still subject to approvals from CCI, NCLT, and other authorities and shareholders. So long way to go. But both have given an update, important to bring. By the way, HDFC Bank also, as I said, gave their Q1 update yesterday in some fashion, right? And the initial update at least. And as per Morgan Stanley, the initial update points to a healthy retail deposit growth at 3.5% QOQ. The sequential loan growth was slightly lower than what the system growth has been mid-June. But the loan growth does remain strong in retail and commercial, while corporate banking growth was muted. The key is, viewers, does this point towards some bit of a lower offtake from corporates by and large? I know that it's ICICI Bank and some of the others which have had a head start in corporate banking, but HDFC Bank was really trying to pick this piece up, corporate banking. And if HDFC Bank has seen muted growth, could we expect the same from ICICI and some of the others? Simply because this quarter, because of a lot of issues, including inflationary issues and geopolitics and supply chain snarls, maybe, just maybe, the demand for corporate banking might have been a bit soft. Too early to say. It's only one bank thus far, which is the large one. It'll be important to see. And IndusInd Bank numbers were okay, but it'll be important to see what SBI and ICICI Bank have to say. That will really determine it. It gives you a bit of a macro indication. So keep this in mind. Then Cipla is in focus. US FDA has conducted pre-approval inspection at the Indore plant from June 27th to July 1st. They received 2 observations on the Form 483 with respect to ANDA filed for the product to be manufactured at the said plant. Thankfully for Cipla, no data integrity observations, which is actually a good sign. So keep that at the back of your mind as well. And then cement. Demand has improved, but prices have slid further month on month in the month of June. And as a result of which, maybe, just maybe, the likes of Shree, Ultratech, Ambuja, or any other cement company may kind of remain not in favor. I mean, they've seen quite a bit of selling already. Can they see further exaggerated selling? Maybe not. But can they see buying? That is the thing which is doubtful. So keep that at the back of your mind. Then FMCG companies, as I already said, watch out for Britannia, HUL, ITC because of the falling input costs. A couple of brokerage calls. So Morgan Stanley's come out with a note on M&M Financial. They are saying they're maintaining an overweight rating with the target price of 225. They said that the month-on-month growth in disbursements was strong and better than what Morgan Stanley was estimating. The collection efficiency in June was higher than in May and April, highest in Q1 in recent history. And stage 3 loans were only marginally higher QOQ per MMFS, at least historically close to 30%. I think the key is the third line here. The collection efficiency for for M&M Financial was the highest in recent history. That is the key thing. Remember, in a time when rural demand is expected to be a bit soft and rural health is expected to be a bit circumspect, this becomes very important for M&M Financial. Maybe it has a good day. Motilal Oswal has come out with a note on LIC. Somehow, by speaking to a bunch of experts, one is naturally suspicious about accelerated growth in insurance businesses in the near term because of valuations and more so on LIC. But this note is interesting. It's always good to counter the thesis. So Motilal Oswal say, of course, initiated a buy with a target price of 830. They are saying the business drivers are in place. Execution remains the key. They estimate LIC to deliver 10% CAGR in NBP during FY22 to 24, while VNB margin likely to improve. They estimate the operating ROEV to remain modest. Valuation is the key thing. At 0.7 times FY24 EV remains reasonable now. Yes, compared to the private players, the valuations is a lot more reasonable, but there is a high sensitivity to equity market volatility, which remains an overhang for LIC. Is this the most convincing note? Maybe not, but the valuation argument is compelling, yes. So just thought we'll bring the Motilal Oswal note to you. That aside, just a few stocks. I just want to see if there is some change there. Yeah. So textile companies, wherein I think the government has extended the exemptions of all customs duty on rare cotton imports till 31st October. So that is one thing that should keep some of these stocks in focus. And yeah, amongst brokerages, by the way, AU Bank, Morgan Stanley target price is 825. And Nomura has raised the target price on Reliance Industries. So watch out for that as well. Last but not the least, viewers, an important update. Something that we put out yesterday on our website and I tweeted out as well. A consumer update, of course. But remember that no hotel or restaurant can force you or me to pay a service charge. They have to clearly inform us that the service charge is voluntary, optional, and at our discretion. Now, when you go to a restaurant next, remember that if they charge you a 10% service charge, they are liable to be complained against. So you may want to pay 10% because of exceptional service, which is one thing, but you can't be forced to pay this at the beginning. So the 10% service charge levied upfront is now no longer valid. Please keep this at the back of your mind. Thanks for tuning in today, viewers. Have a safe day ahead. And we'll be talking to 5paisa CEO today at 10 a.m. Broking volumes have come off. Maybe the monthly average users have come off. It'll be interesting to see what the outlook is for some of these discount brokers. Maybe it's a conversation you don't want to miss. Stay safe.